Hi everyone, in this video we're going to take a walkthrough of Amazon's third quarter earnings conference call to try and figure out what's going on with Amazon stock. It's down significantly since it announced these earnings, so let's go through it. So here we have CFO Brian Ozofsky, and he starts off saying worldwide net sales were 127 billion, an increase of 19% year over year. That's really good. That's no reason for complaint. And so we move on here, and he goes on to say that they're offering their widest selection ever. They've taken actions that drives strong recovery of in-stock rates, so you're not seeing things sold out as much. And third-party sellers are representing 58% of total paid units in the third quarter. It's the highest percentage ever. So all of that is good news. I like to have that as an investor because I want Amazon to consist more of sales from third parties and then for Amazon to take a fee from allowing those sales, right? Instead of Amazon owning the things that it's selling on the platform. These types of sales, the third party sales, are more profitable and they make the business less risky because they're not investing in the inventory. The CFO goes on to highlight that two incredible content additions in the third quarter were successful. The Rings of Power attracted more than 25 million global viewers on the first day, and the first installment of NFL Thursday Night Football in September averaged more than 15 million viewers. So also good news. And additionally, the 3 hours of this football drove the biggest Prime signups in the history of Amazon. So people were signing up to Amazon Prime so that they can watch this football game. That's clear evidence that customers see value in this content and they're willing to sign up for Amazon Prime to get access to this content. And oh, by the way, they might go on to amazon.com and spend a bunch of money because now they get fast and free shipping. Also, advertising sales grew 30% year over year, and AWS, which is Amazon Web Services, sales increased to 20 billion, up 28% year over year. So far, I'm not seeing anything that investors in Amazon stock should be upset about or any reason for the stock to be down as big as it was following these announcements. But let's keep digging. So now shifting to operating income, the company reported 2.5 billion in operating income and they generated 1 billion in operating cost improvements driven by higher leverage of their fixed cost base. So Amazon has a large base of fixed costs, and as sales grow, their costs stay the same because they're fixed, and that spread between sales and cost drives operating income. But what the CFO didn't mention here is the operating income of 2.5 billion was down significantly from the prior year, and that could be one reason why investors did not like this quarter's earnings results. One of the reasons why operating income was down was because of the major investments the company made in content, including the global premiere of Rings of Power and the launch of NFL Thursday Night Football. So those were expensive to retain the rights for those content properties in the third quarter. Amazon also had a pre-tax valuation gain of $1.1 billion that was included in non-operating income from their common stock investment in Rivian Automotive. Remember, Amazon has invested substantially in Rivian stock, and so as Rivian's stock price fluctuates, that impacts Amazon's bottom line from quarter to quarter. For the full year in 2022, Amazon expects to spend $60 billion in capital investment, which is broadly equal to what they spent in 2021, but this represents a reduction in fulfillment and transportation investments of 10 billion, which is offset by 10 billion in increase in tech infrastructure to support the growth of AWS. Again, this I like to see this from Amazon management. They're spending less money on their fulfillment network and logistic, which is a less profitable part of its business, and they're spending more money on AWS, which is the most profitable parts of its business. And so I like to see that reduction in the lower profit business and increase in the higher profit business. So I like what I'm seeing from Amazon so far. As the third quarter progressed, we saw moderating sales growth across many of our businesses. We expect these impacts to persist throughout the fourth quarter, and we're taking actions to tighten our belt, including pausing hiring and winding down product segments we believe the resources could be better spent elsewhere. So now I start to see why Amazon investors were spooked from this quarter's results. As the third quarter progressed, they saw sales growth moderating, and that trend continued in the fourth quarter. So the fourth quarter is not looking too bright so far for Amazon stock investors. That's all I've got for this Amazon earnings call deep dive, you can call it. If you've gained some value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.